Good evening, I'm Giuseppe Basile, I'm the Untitled Trader. You can find at the website www.fibstalker.com, and from the beginning of the year you will be able to find me also at the website, my brand new website, www.fibstalkertrading.com. Good evening, today is January the 4th, it's Sunday, it's 20 minutes to midnight, and in this video I'm going to review for you the 13 markets I follow. I like to do this weekly review for my newsletter subscribers, and if you want to receive this video you can go to my website fibstalker.com, or also fibstalkertrading.com, and you can actually subscribe there for free. So let's start from the euro dollar, and I want to start from the weekly time frame. This market is actually into now dipping into an important area of support, starting at 121.25. I have 121.40 on the weekly time frame, and it's actually challenging the lows in 2010, as you can see here. And at this point we should start seeing participation from longs in this level if this area of support is actually real. And of course we are not going to buy these levels blindly, but I use a technique which is the fib stalking timing technique that we can use. And when the sequence of measure move fails, if it fails on top of those important areas, that's when we get involved. So as you can see, we dipped into this 121.25. We got participation at the level as we were anticipating, because this large 50% level are always very, very important. But that participation was not enough to actually keeping price reversing this trend here. So the euro seems to keep moving desperately on the downside. Let me show you the sequence of measure move that we had on these 4 hour time frames. First participation was at 124.78. Next measure move came, and algorithms picked up this price at the 123.32. and market went into the first target, a little bit of participation, profit taking right at that first target, and then the market continued into the second target. So we continued applying our rules. If you want to learn these rules, you can review my FibStalker methods coaching program. I'm actually enrolling for February and March, so if you are interested, let me know. The January session is full and is starting next week. As you can see, price participated at this level, these levels, the 122.21 into the first target, and again second target, and then after that we saw this move lower on Friday in this reversal now on Sunday night. So the next measure move in this sequence, and where we want to see this market, the level that we want to see this market piercing to be on the safe side would be this 120.54 at current lows. Price above that 120.54, and we can start confirming participation in the 4 hour time frame. But this market is actually moving in extension, and we could have a jumping extension here as well. So there's no confirmation just yet, and this confirmation may never come that will reverse this euro. So the euro at the moment seems lost. We lose this 112.15, which is still a long way far, but this market could actually move very quickly and cover this distance here in a few weeks. If that happens, we can kiss goodbye the euro dollar, because there won't be any interest in participation from the larger time frame, weekly and monthly, that will push this price higher, which means that there is a real possibility for this price to move into 0.80 here. That would that would be the level where we could see this price moving to. So moving to the SP500, this market has been moving higher. We captured the 1833 level, the previous contract. This was an extension higher, which had first target at the 21, now showing 2093, because this market, this price is actually this market actually trades in contracts, and contracts have expiration periods, and so the price data has to be put together in a continuous contract, which is what you see here. So those levels change, but the traces never change. So we got participation at this level, and I showed you in the previous week that we could also capture this 1967 as an extension from this level to the highs, and it was traced with a few days in advance. It was possible to time the level as well. So what can we anticipate for this market doing? This market could actually go and test the 2025, and there again, if that happens, I'm going to apply the Fib stalking timing technique, which is my proprietary timing technique. If you want to learn about it, you can actually have a look at my program. The dollar index is obviously in a screaming move higher, and that's fine, considering that basically all the rest is actually at the moment under pressure, and we know that there is no reason why we could not see the price of the dollar index at this 99, 90, 100 or 104.78. So will it go quickly there? Well, that depends mainly on the euro dollar, what the euro will do, because we know that the euro is 60 around 60%, a little bit more than 60% of the dollar index. So one way to model this price higher is through an extension from this level to highs. And as you can see, price went into the first target, now it's reaching that second target. So if that's the case, we are going to model the next measure move is from high to the high before a retrace, and that could be for example 90, 91. We don't know that just yet. And remember that the euro is actually pushing into that potential area of support. If we don't get support there, this market could actually keep moving higher very quickly. Moving to the dollar here, the gold mini future here, we know already that and here there is a reminder of my FibStalker methods coaching program. Have a look at it at FibStalkerTraining.com. So when it comes to gold, those who follow me know that I mentioned potential lateral move in this market. The reason for that is longs were not able to push this price higher, and shorts soon after that, shorts actually were not able to. So after that, we saw that initial participation here, and we actually saw longs, shorts being respected here, as you can see. So there is the possibility for this market to keep moving lower at this stage as shorts start being respected here, as you can see. And also the trace from the highs to lows here actually showing a potential continuation into the 11.55. So the continued strength in dollar is actually showing a market actually is producing a lateral move and a potential for a continuation lower here. So if this 1205 keeps holding, this price could actually continue into 1155. Moving to the US dollar versus Japanese yen, this market, as we know, on the weekly time frame has been respecting an initial extension here from the highs beginning of 2012 to highs middle 2013, which we were able to capture this 94 here, which we're pressing to first and second target. We know that the weekly participants will be waiting for price to get into this 112.82. This market actually has been pushing higher because also of the Japanese QA2, and however, this market is pushing higher only because of the dollar index, the way it's pushing higher at the moment. Of course, this could continue higher. We have on the weekly time frame, we had participation at an extension level as we were expecting, and actually we were anticipating. So once the sequence of measured moving lower broke, we had the start of this move higher. So we still have the weekly, which is neutral here, and we're waiting for market to actually retest or test the level where we are going to see participation from the weekly time frame. Until this daily participation will continue, we're not gonna see price, we're not gonna see lower price here. This market anyway is on a screen longs at the moment. It's in a sequence of measured moves longs, and only when the daily will give way, we can see this 1280, 1270 here trade again. The euro versus Japanese yen is correcting as anticipated, and the sequence of measured moves on the weekly time frame failed, and we had participation at this level, and then after that participation we had a violation of the 134.55, price getting very close, not really into that 149, 150 level, but then we knew that there was a potential for a retrace here. Now the next level where we could see some sort of participation is 138.74, and we will see there. I anticipate the 136.15 being pierced on the downside because of the weakness in the euro, but also because the weakness in the Japanese yen has not been reflected in this market just yet. So there is a possibility for this market for a much larger retrace, possibly into an extension 130.60. Moving to the pound versus Japanese yen, this market, when we look at the weekly time frame, we know that it's into a potential area of resistance here, which is identified by tracing from the highs in 2007 to lows in 2012 here. This participation into this 184.95 level here, and when we look at the sequence of measured move on the daily time frame, we had a beautiful sequence here which could be timed very nicely, and we had participation in this 165.75, which would press into the first target. We had a next the following measured move here, which captured price at that 168.76, pressing to the first target, and now retracing. So if this retrace continues, the next level we are going to see some participation on the daily time frame. It's going to be quite a deep retrace here, 173.25. And some people, I mean, the majority of people do not understand why we have these retraces. We have these retraces because participation from algorithms and professional traders is not going to come before this 173.25 is tested. So any opportunity to re-enter this market, if it if it retests this 185.78, could be a short opportunity. Moving to the pound versus the US dollar, those who follow me know that I've been mentioning for this market a retest of the all the way halfway back from lows to highs here, from the lows in 2009 to the highs that we saw mid of 2014 last year, and we are into this area of potential support. Likewise for the euro, very similar situation for these two markets, and the difference is that for the pound we also have some pressure from the upside, and that would be from highs to when it trades from highs to lows. Here we had this participation 169.55 back in 2009, and the market got into that level in 2014, that area of potential resistance, and eventually the shorts had the upper end there. So this market lost, not yet. We need to make sure that there will be no participation on the upside. We need to pierce the 149.18. Moving to the Australian dollar versus the US dollar here, we had again a similar situation. All this market, the trade against the dollar, are actually retesting large full range 50% levels here, and that's where we are going for this market as well. And that would be the 0.7937 there, and this market is in a sequence of measure move lower on the smaller time frames. If you want to get this information and learn to analyze this market this way, you can actually have a look at my Fibstalker Methods coaching program. So this market, we are waiting for it to test this level, and then we'll see what happens at the level. It's possible that this market will actually just continue into that second target, and if there is no participation, we will continue trading this market in extension shorts. The US versus Canadian dollar, it's actually continuing higher now into the next level of resistance, that it is this 126.28. that would be a second test if we get there, and as you can see, this level has been tested in the past, 126.28, and potentially is going to be retested again. What this market is trading at the moment is an extension long that we only identified after the fact. That's very important. I'm not, we are able to identify some of these levels before the fact. The specific level has been identified after the fact. Is an extension, and it has the potential to bring price all the way into that 120.28, and we are this market is actually on its way to that level. It's not that far. We can see this on the weekly time frame as well, and it's the extension. It's from these highs to highs identified after the fact, but that's good enough to us, this price discovery. And if price gets into this second target and retraces, we're gonna catch the next move higher, which is 1000 pips. So that's the way we have to look at the market without anticipating. Taking a long here would be too late in this market. There's no need to do that. The US dollar versus the New Zealand dollar versus Canadian, the US dollar here has been hovering on this 50% level now for weeks, and now likewise all the other markets are actually challenging their all the way halfway back here, starts moving lower, and only if we lose the 0.7431 we will need to consider the next level, and the next level is going to be this 0.6870. If you're not involved in this market, you should not be worried, because these markets, even if they continue lower, will give us opportunity to enter short. What is important to us is to identify the levels where this market can move to, and only get involved in the market with low risk trades. So there's no rush, and even if this market continue lower, there's no rush because it's gonna retrace like it always does, and we'll be able to find the anchors to trade and time the next measured move short. Finally, US dollar versus the Swiss franc here, which is the last market I'm going to show you today. This market actually has been trading nicely in extension here. We're able to time this 0.9361, which is an extension. We broke price into the first target, and just a few days we broke price into the second target here. I also mentioned and timed another measured move here, which was the measured move from highs to highs. There was an inner measured move, participation here, second test, and the first target was aligned with the larger entry here. And this market just continued higher into the second target here. So now there are two continuations. The most important one is the daily continuation here. So if this market actually start moving lower because of profit taking here, that's the 98.96 is the level where we are going to pick up this market for a continuation higher. It's also possible that this market will actually start retracing from here at this 0.9925. As usual, we don't get involved blindly at this level. I use the fib stalking timing technique, which is a proprietary technique that removes stress from trading by actually applying a sequence of steps with no money at risk that allow you to test this level. So once you know these levels where algorithms can potentially participate, you apply the fib stalking timing, and you can get very high reward to risk with a very small risk. So you don't need leverage, you don't need the broker leverage, you need very simple money management technique, and also even risking just 1% and even less with this very high reward to risk trades. You can do very good returns, of course, if you are disciplined. This is it for today. Thanks a lot for your attention. I wish you a great week, and actually I wish also to you all a happy 2015. It's my wish that will be for you a successful year, and if this year you want to start looking at the market differently and learn an edge that is grounded in the way modern markets work with the algorithms, just go to fibstalkertrading.com and review what I have there. I have a coaching program I call the Fib Stalker Methods coaching program. It's in two parts. The first part, you learn how price moves, price structure, how to analyze it, how to identify trends on all time frames, looking at how algorithms are positioned in the market, and you also learn the fib stalking timing, how to time those levels. In the second part, you learn how to identify the 50% levels, the way I do it, and also when the market is extended. And at the end of the coaching program, you will have your trading system based on the proven components that I'm going to give you, and you will have it tested. Thank you very much, and have a great week, and I'll see you soon. If you have any questions, just drop me an email at fibstalker@gmail.com. Bye bye now.